Good morning and welcome to the early bird. And I just thought I'd start on the S&P 500 and look at the bigger picture again. And what we're looking at here is well, cycles actually. So I don't know if you recall, but this particular pattern here from the 2007 2008 high here, this little pattern in here is pretty much the same as this little pattern here in Elliott terms, and that means that this would be 5 waves down here for wave 1, and we're basically looking for wave 2 to come back up here. We know that as it comes into the supply area here that it's going to meet resistance through this area here and and struggle at that point, and it is from that particular move down through here. Now we're seeing a retest of that, but this pattern through here in 5 waves here is the same as this pattern through here. And what we were looking at through here in this pattern coming down and coming back up through here, we're just looking at time. So they both had the same time in them. This one here has got the same time as this one coming down through here, and now we're at the same time period in this one moving up through here. So we've been through this before, but for the folks that haven't, I just think it's interesting, and it was just something that we were watching, and it just seems to be coming into play. So this particular move down through to here is 108 days into wave 1 coming down, and this move through here back up through here is 44 days coming back up through here. So that's the same as what's going on now in this particular structure, because this here is an intermediate wave 1 down and intermediate wave 2 coming back up. This is the same here as well. This is an intermediate wave 1 coming down and intermediate wave 2 coming back up. So they are the same in terms of the degree, and also in nature as well, in terms of they're both wave 1 coming down. So when we're looking at this one here, we've got exactly the same 108 days, and what we were looking for over here, we were looking for 44 days over here. Now we're 1 day off here in this case, but that's the 45 days there. So we got last night's bar, which was down, and that's what we're going to talk about, that bar there. So it was only 1 day off that that number. We're also looking for that number coming through here, the 1272 number, which also came in rather nicely as well as the high there. Well, it was actually 1271.8 or something. So it's certainly possible. So the bar that we're looking at last night was pretty much a sort of reversal day, really, because it had that high and it closed lower. So it's on the daily, it's got that sort of reversal there. But we need to take a closer look into this now and look at the internal wave structures there to understand what would confirmation of a downtrend be, and so forth. So, but just coming back into this picture here for a moment, in this picture here, do understand that if we've got that high in there right, then we're looking at a pretty severe sort of bear market here, if that's going to be the case. And we need to look at all options all the time. So this structure here, just bear with me for a second, this particular 5-wave structure here, yeah, is that 5 waves down, and then we'd be looking for 3 waves back up, and that's kind of what we've got here. This one here can push higher into this area up here and still be okay. Basically, you can take out this high here in that area there and push up, further up into here. All retracements, as you can see from this little move back up here, was really quite high up here. So we have been getting high retracements in this market. So it wouldn't be anything sort of new if that didn't make a move up through there. But I don't know if that's the case now, because even the ASX market is has been sort of turning down a bit as well. We'll get into that, but that would be to there, that would be to there, and that's either right there and finished, or it can move up here further. But we're just considering this being finished here. We don't have the evidence, but we want to see what the evidence would be. But once it is complete here or here, then we'll see another 5 waves down like this come into here. Now this 5 waves coming down into here is going to be bigger than this 5 waves here, because it will be a third wave coming down, or even a C wave. It doesn't really matter at this stage, but it would have to be longer than this one here. And when we come back and have a look at these bear markets back over here, you can see kind of what we've had in this particular case through here in terms of that. So we've had this wave 1 down a wave 2, that's what we got here. Then you can see that massive third wave coming down into here. So that's kind of what we're looking at for here, but even more so actually, because when it's all done and considered, this here is down for 1 and back for 2 here. So actually we're in a third of a third here. So we're in a much bigger, more dangerous. This is just companies here, you know, biting the dust. This one here is a bigger fish. It's sovereign debt here. So a bigger structure can unfold through here. So anyway, we'll just play it out. But you know, it would be a nice short, and that's what we're sort of looking for. So coming into the Dow Jones here on the 40-minute chart here, not that 40-minute means much or anything, it's just the way that panned out, but this move down through here is currently in 3 waves. We want it to be in 5 waves. So if it does move into 5 waves, then we'll have a correction back up, and then we'll have a move down. So but as 3 waves down, it's still corrective in that sense. I'll just bring this into here. This is a 4-minute chart here, just to sort of count it out for us a little bit here. Essentially, we've got this 5 waves down to here for wave 1, and then we've got wave 2 coming back, and then we've got wave 1, wave 2, wave 3, wave 4, and wave 5 to here, or to here. So what we're kind of looking for is, if I can just bring this other chart back here for a moment, just so I can draw on it a little bit quicker. But this structure coming down here, we want this to come a bit lower down here. We want 5 waves. So what we're looking for in this structure here is we're looking for, I'm just bringing this back up into just using the blank space here really. So we want to see 5 waves down like this. But this 5 waves down here, as I've drawn on this other chart here, see how I've got that wave C there? So we've got a larger A, B, and C here. So that still could be a wave 4 corrective move from there. And the wave C would have 5 waves in it as well. So even if we got 5 waves down here, it still can be wave 4 of C. So, and it can work higher from that point there. But what we're really looking for is we're looking for if not so much what happens here, but unless it really comes down strong, but what we are sort of looking for is a 5 wave structure down, a 3 wave structure back up, then 5 down again. And if I can just come back to our chart over here, this particular 5 waves down here, if this was last night coming down through here, then what we'd be looking for would be 3 waves back up. Now this is the tricky bit, because this 3 waves back up, we don't know it's 3 just yet, you know what I mean, because that 3 there could turn into 5 waves like that and offer more of an upside there. So we won't know it's 3 waves until a certain point. So it would only be 3 waves until we actually seen this come down here further. Do you know what I mean? So we'd need to see that 5 wave structure here move up, that sort of break down through here to make that a 3 wave structure. You with me? So it's still going to take next session to sort itself out. And of course, going into next session really takes us into you know, deeper into the Euro meeting and the outcomes from that. So we can still, I mean, we can't really nail it down in terms of Elliott which way this can run. So But we are seeing weakness here. It would have been much better and stronger that on the Dow Jones here if the market stayed above the 12,000 here is the main support, obviously, but 100, 200 and 300 is all part of group 1, and if you understand group 1, then you would sort of normally understand that as a market's moving up through here, then yes, it can come down and check on things as such, but you would want it to find support on the pivot here, the 200 through here, and then also build up and have a correction up here. This correction up here, if it's happened here, is too severe for a normal move market flow through group 1 to come back up here. So now this price being down here is a part of the 12,000 story again, but being a part of the 12,000 story basically brings it into negative territory as well. So it really should have stayed above the 12.1. So being even below here is a bearish just a bearish picture in regards to using the levels. So it was basically a breakdown within the price structure, and that can certainly bring in more of a bearish picture. It's pretty much the same. We've looked at the S&P 500 is much the same as well. So the 1250 here would be was the line in the sand for being bearish or bullish, and it's moved through that 1250 there, taken out its support here, where the Dow Jones has still got its support there. So we're seeing a wider breast of companies move to the downside here. We could say that from the 1200 here, the 10, 20 and 30, which is also group 1, if the price came down into this here, we could get a bounce off here. See, because if this fourth wave here, if we were looking at that in terms of the Fibonacci sort of retracement level as a wave 4 taken up to that point there, we can see that that's the 38.2 retracement level here in this area here. So that it's sort of, it really hasn't broken any rules as such. This was just a headline news reaction from the Eurozone last night about credit flow and so forth. So it hasn't really broken down. It can still just be a corrective move, but certainly the bias is to the softer side there, but there's still news to come out of the meeting as such. The UK market's the same as well, in terms that it's done a bit of a thing, but more in line with the S&P 500, I guess, taking out its sort of lows here and its supports here. Now, we understood when we were looking at this through here that there's weakness in the structure. This is strong, this is overlapping wave structures, and it's creeping, so it's a sign of weakness, and now we're seeing that weakness. But in terms of Elliott, we can't confirm if this is an A and a B and a C wave down to here, or it's a down for 1, back for 2, and the third wave starting to unfold through here. So we can't confirm that price action. If we got a nice clear 5 waves down in terms of 1, 2, 3, 4 and 5, then that 5 wave structure would give us 3 waves back up and then another 5 down. So if we see that 5 waves here, then we know that that's confirmation that we've got a bigger picture unfolding to the downside. And we can see here that the 56, I've mentioned that number a few times, in terms of $56 or 56 cents, or if even if you're trading between certain dollars of 50, like $20.56, you'll see it come in there as a day trader. It's worth sort of noting it's been a strong number for the FTSE for quite some time, not just in this little area just here. But what we can see here is that it is a resistance, and the subgroup 2 level below that is resistance as well, and that's certainly showing up on the DAX as well, in terms of we've just been using this 6,180, which is in terms of ratio is 618. So that's been played out there, and it's continued to play out And I think one of the interesting things here is this is a little bit like the SPY, actually, our local market, in terms that we've kind of got this down for one, back for two, down for one, back for two. We've kind of got a different sort of picture here, really, in the downtrend. And this is suggesting that there is more downside to come because of this particular structure. So even these are in brackets, these two here, these are in smaller ones. So we could look at this in terms of 1, 2, 3, 4, and 5 here. That would just be for that thing, and then that would be down for 1, back for 2, down for 3 at this stage here, with 5 waves in here, and then 4 and 5. So this has actually sort of got a bit of a lead on the situation in terms of the downside. But I thought the interesting thing is that particular pattern here of this series of 1s and 2s is also in the SPY as well. So when we look at the SPY here, we can see it quite clearly here on the 1 hour chart here. So we've got this down for 1, back for 2, down for 1, back for 2, down for 1, and back for 2, and the third wave sort of unfolding through here. We kind of accepted this yesterday in terms that we were looking at Thursday, and Thursday's the bear day, and it was down with, well, looking at CBA and so forth, the leaders. So that our weekly cycle has sort of played out. But our weekly cycle now is Friday, and Friday Thursday we look for the volume to dry up in the afternoon session on Thursday, and then we're looking for supporting volume to come in on Friday, today, in the morning session, and then having a stronger close on the Friday afternoon, like today. Now, if we don't get that, then what we're seeing is we're seeing a 2-week cycle, because it's been humming along every day, spot on for every day, pretty much. So for Monday, Tuesday, Wednesday, Thursday, and Friday, it's been quite exceptional. The only sort of soft spot weakness in it was Tuesday afternoon, not shoring up with volume support. So that was and Wednesday was a little bit, it played out correctly, but didn't really see that real higher close come in. So we're seeing a bending in the cycle. So if we don't see any strength come into the market today, then what we are seeing is we're seeing a rollover to the downside, and we need to be moving with that weakness. So that means that we need to reduce our long positions. I have been, with our long positions, we have been tightening them up. We have been taking profits on the way with them all. The ones that we sort of put out yesterday may have to be cut, but apart from all of that, we've followed up nicely. So we need to sort of roll over and go the other side with it. Now, it's going to be a bit tricky, because all the movements really are coming out are headline news. So that makes it a little bit sort of trickier. But when I see pictures like this one here, which are offering further downside, we really need to sort of roll with that somewhat. So just bear that in mind. Don't look for longs. Don't you could get it right by buying at lower prices here, but that's not what this is telling us here. So we're looking at a larger market turn play out, and we're seeing that in other markets as well, our drivers. So we're seeing it in oil. We've got that same picture here. Unfolding in terms of impulsing to the downside. Not that it's retested 100 and rejected it. Sure, it's moved through it, but it hasn't really rejected it, and we'll see more of that to come. But this particular pattern through here is suggesting more of a bearish pattern. We're certainly seeing it in gold. We've been looking at this 5-wave structure coming down through here. So we were looking at some sort of corrective pattern through here. We knew the supply was up here, but anyway, it's all sort of done and dusted now. So we should see further downside through here. And that's the same with silver, of course, as well. We were looking at this here, but that spike there may have trapped a few people yesterday, but our analysis is for bearish picture to the downside with this being here. So essentially, you can look to get into short positions now, but do it on the retest here. So we'd be looking for 5 waves down, some sort of retest of something up here, and if it's the subgroup 2 here or the 32 here, it will come into play. So these supply zones here will continue to move down through here and just follow those down here. The retracement levels should get lower and lower as it moves down through there. The copper market is also important to us now. It's also got the same sort of pattern as the DAX and also our local market as well, the SPY, in terms of we've counted it down for one, back for two, down for one, and back for two. But I don't think it's the case in this market here, because I think a little bit like crude oil, that we failed to get a fifth wave up here. So I think that this is a truncated fifth wave here, but I could be wrong, and it doesn't sort of really matter at that time. We can see weakness coming in here. Now, if we see this further weakness come in through here, and the 345 here, being under 350 is not a good look. Even being this far down is not a good look. So there is a bearish thing in there. So, but once again, the 350 is a line in the sand. So, once that becomes, if the market rejects that as being a support and accepts it as being a resistance, then we will see further downside. It really is this, in terms of Elliott, this top here being played out here, create the overlapping wave structure for a bearish scenario. But we can see it further in here, so we're bending to that, but we need to get confirmation on that, and taking that top out there would be confirmation, but being below 345 would also be that confirmation as well, and that's going to happen anyway, because we can see that strong move down there will continue down here. There'll be a bounce, and then there should be another one down in terms of 1, 2, 3, 4, 5 down to here. So well, copper is our guide stick for working the Australian market, because we are a commodity market, and also currency as well. So looking into the currencies, we're looking at the US dollar here pushing to the upside, and the euro and Australian dollar pushing to the downside. It does concern me a little bit. Yes, look, we were looking for some sort of correct reaction here, looking for support, and then a move up through here. But this here bothers me a lot, because it's this price action through here is very corrective in nature. So it means that this should come down through here further, but it's not, and you've got to draw the line in the sand somewhere. So we were looking at this whole subgroup to here. While the price was under that, then would treat it as a bearish situation, but knowing that a new low would come in, and then the price would be moving back up above here. We're expecting this high to be taken out here. So look, if this can find support here, then we can consider this in a stronger position there. So yeah, in the bigger picture, the US dollar to the upside and the euro to the downside, it was just sort of navigating through this here, and this was just a bit sort of a bit sort of messy. We're not really seeing any impulse waves to the upside or to the downside, but this move through here is an impulse wave, but it could be just part of an ABC, in terms of something like an A wave to here, a B wave to here, and a C wave to here. So I guess, if after a bit of time the 72 here becomes the support and 79 becomes the support, then we can definitely be looking to the upside. The euro is broken to the downside, and we're looking at this being, well, we're looking at all of this being a part of a larger correction, in terms of we've got the A, the B, and the C here coming down through here, the A, the B, and C as a corrective move. But we also figured that this here being a corrective move, an A wave, we may get a B wave here and then a C wave moving up through here, and that's still the case. I mean, this euro meeting's not finished, done and dusted yet, so this can be a bit of a trap here, and on the Dow Jones and the others as well. So we just got to get past this euro meeting. It's very difficult to pick up the we can pick up the natural flow of things, but when you've got headline news coming out, that is driving the markets. It's just a guessing game, and there's not a lot you can do. But from an analyst's point of view, there's not a lot you can do. But from a trader's point of view, you need to set positions up in front of the market and make sure you use stops and make sure you manage your risk properly. Using less is probably a good idea at this stage until we've got real confirmation on turns here. The Australian market as well. We're looking at a top coming into play from wave 4 here, as you know, looking for a move up. Anywhere up into the 105 area. We just didn't know how far it's going to go, and as being news driven, it's just been sort of pushed around a lot. So look, this can certainly be, the wave 3, the wave 4, and the wave 5 topping through here. So we need to work with this little pattern coming down through here. So in working with that pattern coming down through here, this is it here. Just squash all this back up a little bit. It's on a 2-minute chart. So, look, I just see this so far as being corrective. I'll do my best to sort of lay this out, but basically 5 waves down to here, right? And so it's sort of like a wave 1 or an A wave, and the correction here. And then you can see that we've got 5 waves down to here. So we've got down for 1, back for 2, down for 3, back for 4, and down for 5 down to here. So this is like wave 3 here, or wave C here. If it's a C wave, then we're going much higher. And if it's a wave 3, then we're only going back up 38.2% of that move down. So just bear with me here a little bit. Taking this out here. So we'd be looking for, if this is wave 1 coming down through here, then we'd be looking for a wave 4 retracement. So we'd be looking for that there. So we're looking for it to come back to the 38.2 retracement, which is the 102 here. And you'll be looking at that coming back in an ABC correction. So if we just sort of zoom in there for a second and grab this little area here, we would be looking for an A wave to here, into the 1, 2, 3, 4, 5. So an A, B, and C to here. So an A, B, and a C, and in the C wave there'll be 5 waves. So we'll be looking at 1, 2, 3, 4, and 5 back up into here. So it should really complete, into the 38.2 area here. So we could say that if the 102 area here, the 72 area here, in the subgroup 2, it became resistance, and this became resistance, then you can look at further downside. If the 102 finds support here, then we obviously can consider this move down as an ABC, and we'll be looking for further upside. So wait for the 102 to become support there. If you've got good support on that, and don't be too early to go in, allow it to hit the 10 up here, the 102.10, and come back and check it, and make it really test, a bit like this here, and then look for some sort of corrective pattern at the 102 here, and then try and build on support. Make sure you got that. There's no rush to get in. Timing is everything. So that's that. So, and that picture that we just sort of explained here is pretty much the same of what's occurring in the Dow, the S&P 500, and so forth. So we don't know what we've got just yet. It's still got a session or two to play out. But in terms of stock trading, we would say that next week, Monday, after the Euro meeting and so forth, and these smaller intraday plays have played out, then we'll have a direction, and we'll have a natural flow of markets being extremely negative or hopefully positive, with trepidation, so on the long side. So we'll be going further up, would have another push to the upside. Then so if the Euros bring out any positive news and it does lift the whole market up, then that would be sort of buying the rumour and selling the fact kind of thing. So we would see, yes, new highs in indices in the Dow and S&P 500, but would see them short-lived. So we'll be looking to short them anyway. Okay, so just getting back, just recapping on the Australian market, we have long trades out there. We have been tightening them up. If we don't see any support come into the market, and Australian dollar can be sort of one of those things as well, if we don't see any support come into the markets, then we need to be looking we need to be looking to exit those sort of positions there. So in the Australian market here, this ABC move here that we're looking at here has just gotten bigger into a downside here. So we've got down for 1 and back for 2. So we'll be looking for further downside here, which just by the by here, if we look at this here in terms of the relationship here, we wouldn't see a total sort of breakdown in the market unless the market was under the 4100 here, below the 61.8 retracement level, and that can certainly play out here as well in terms of that being positive, because we would have this here in a much larger ABC pattern, which would bring the C wave down to here. It would bring this as an A and a B, and then the C wave would be down for 1, back for 2, down for 3, back for 4, and down for 5. So that can still play out down to here. So we could say that until the market's under the 4100, if the market comes under the 4100 and gets locked under here, then we've got a bear market on our hand. But in terms of trading, we need to accept this here, this breaking down here, or this move here, as part of a larger bearish picture to the downside here, and looking at the 4200 here becoming the resistance. So during the day here, if the XJO finds the 42 as the resistance here, then that's a good reason to really tighten up on any of those long trades that we have in the markets. Alrighty, well, that's it. We're just watching the smaller plays roll out in terms of this is the S&P 500 here, and where the euro will be following this, the Australian dollar will be following this, our market will be following this as well. What we have so far, basically coming to the downside, is we've got down for 1 or an A wave, back for 2, and then we've got the 1, the 2, the 3, the 4, and the 5 down to here. So this can be an A and a B and a C wave down to here, and then we can be moving up from this point here. If we move up a little bit in here as a wave 4 and then get a wave 5 down here, then we'll get an ABC correction back, and then we'll get another 5 down through here. So it's just a matter of allowing this to play out, and that's what we have to do. So we just have to be a bit of patience, and like I mentioned, the Euro meeting, anything can come out of those gates when they open. We just don't know. So less is more in terms of position sizing. Alrighty, well, good morning, good luck, and enjoy the weekend.